All right. Hello, everyone. Thank you for joining us today. I know everyone's very busy, but we appreciate you guys each, and just wanted to make sure that we said hello. And I'm going to kick it off to Timothy Castle from Lake Charles, our broker member, who's going to be helping us with everybody. Tim, can you hear me?
I can hear you great, Luke.
Oh
Everything
no,
good in
I
Baton
just paused
Rouge?
myself. Okay, here we
You
go.
paused yourself. All right,
Yeah.
good. We gotta love technology.
Yes,
Technology
sir.
can
All
be
right. Well,
smarter than us at times. So,
well,
hey, thank
thank
you.
you, everybody, again. And Tim, I'll let you take it from here.
Good. Thank you, Luke. Thank you for having me. I want to welcome all of the brokers around Southwest Louisiana and across the state of Louisiana. Thank you for joining us this afternoon. We really look forward to our presentation today. I'm Tim Castle, as Luke mentioned earlier. I'm part of the executive team with Louisiana Realtors. I'm Region 2 RVP, representing the southwest part of the state of Louisiana. So we're going to go ahead and kick off today's broker summit today. We have a couple of really great speakers lined up for you, everyone. We're going to kick it off with Dr. Jessica Lautz with the National Association of Realtors. Thank you for being with us today. Dr. Jessica Lautz is the Deputy Chief Economist and Vice President of Research at the National Association of Realtors. She's been with NAR since 2007. The core of her research focuses on analyzing trends for both NAR members and housing consumers. She is in demand as a speaker and by major media outlets to provide commentary on real estate markets. She has testified before Congress on behalf of NAR. Thank you for doing that. As she volunteers at Nottingham Trent University as an industry fellow mentoring real estate graduate students, as a committee chair at the National Association of Business Economics, bakes birthday cakes for underserved youth and with a cake for kids. Well, that's really
Mhm.
neat. That's really neat. Cake for kids. I've actually heard of that before. And sits on the board of the Food Recovery Network. Dr. Lautz has been recognized by Housing Wire's Women of Influence and RS Media's Newsmaker Award. Jessica received her doctorate of real estate from Nottingham Trent University in the United Kingdom. She also holds a master's in public policy from America University and undergraduate degrees in political science and law and justice from Central Washington University. Welcome. Thank you for being with us today.
Thank you so much. I'm excited to be with you all here virtually. Louisiana, truly one of my favorite states. So excited to be there for NAR Next as well this fall. So hopefully everyone will be joining in person. So I do have a bunch of data here at the end of the presentation. I'm going to give you a lot of resources as well, and I've already proactively set my slides over so that you all can actually have these as well. So don't feel like you need to scramble and grab pictures. I believe they're going to all be sent out to you. So when we're looking at the housing market today, there's a lot of misinformation that's going around social media. I'm seeing constant misinformation. One of the things that I'm seeing a lot of is we have plenty of housing inventory to go around. While we do see a rise in housing inventory, it is absolutely a small incremental rise in housing inventory. And frankly, we're just about at the same level as we were in February of 2020. So we have a ways to go. The other problem that I see when we look at housing inventory and we're seeing a rise is it's not necessarily meeting the incomes of local populations. So even though we'll have a rise in housing inventory, it can be a luxury product, which frankly, not a lot of people can afford. When we look at metro areas throughout your state, I took a glance, and what I can see is that it is very similar to what we see across the nation, where if you have a household income below 50,000, below 75,000, you're going to have a hard time finding a home. And so, frankly, that means school teachers and first responders are really going to struggle to be able to find homes in our local communities. The other big factor today, of course, is mortgage interest rates. We know from the Fed that they actually held them steady. That was about 2 hours ago. We heard that announcement. I will say that while the Fed held the Fed funds rate steady, mortgage interest rates likely are going to respond to that. We have seen that mortgage interest rates have been in the mid sixes pretty steadily for weeks now, frankly. There hasn't been a big swing in mortgage interest rates. It is possible that they will react to the announcement from the Fed funds rate, and we could see some movement there. But in all honesty, they seem to be closely reacting more so to oil prices than to anything else right now in the market. When we do look at what the implication would be if rates fell, we can see that it's different within each local community. So we would actually expect about 1,900 new buyers in New Orleans if rates did fall to 6%. That being said, it wouldn't happen overnight, and I don't have the expectation that it would happen anytime soon. We know that housing affordability is really being hurt right now, and it's not just by mortgage interest rates, it's also by home prices and just the availability of homes. One of the things that's being talked a lot about too is the lock-in effect of low interest rate mortgages, owners just holding on to homes for longer periods of time because they are in these low interest rates. But one of the things that I think is really helpful to note is that this is not something that's new. People have been staying in their homes for longer periods of time. And it actually happened right around the Great Recession that people decided that their change in mindset in home was a little bit different. So they used to move every 6 to 7 years, and that increased to 8 to 10 years. And now it's all the way up to 11. I do think there's an opportunity to reflect on those home buyers and sellers that you worked with back 10 years ago. Are those the folks who may be wanting to make the move now because they've been in their home for about a decade? Because that's what we're seeing, is that people are moving about every 11 years if they're placing their home on the market. And that's a big if. So as we take a look at home prices, yes, they're going up on the national level, but let's take a look locally as well. We can see that on a local level within your state, that home prices since 2020 to 2026 have actually increased nearly 28%. So we are seeing a growth in home prices. And of course, that means something different on a local level. I'm taking the data in red is actually from our Metro Market Stats dashboard, and I'm going to give you the QR code at the end so you can play around with that. For every metro area within the state of Louisiana, you can actually grab this information, and you can grab it for homeowners who have owned their homes for 1 year, incrementally all the way up to 10. So if you know someone who's been sitting on the fence and being like, I don't know, maybe I just want to rent for 7 years, you can say, well, this is the equity that you could have gained over that time period. And I think that really starts to hit home when you actually give them hard numbers like that. So for someone who purchased in New Orleans 5 years ago, they would have actually gained an average of $85,000. Now, I do say this is not every home. Certainly, I'm taking a look at the general metro area, but it does give some context and some flavor to what someone would have gained over that 5 year period. The other thing is, that was a very unusual time period, right? So 2020 to 2026, I do not want to overstate anything. But what we are seeing is that in the last year, we are seeing that Louisiana is still has a positive situation within housing equity. So you can actually see a nearly 3% gain. And that is actually really normal. So what we are seeing on a typical basis that is not 2020 through 2023 is a 3 to 5% gain in home equity on an annual basis. So we're seeing it back down to the norm generally within your state, which is a positive situation. And that's generally where we're seeing most states actually, is right around there. One of the opportunities that I want to throw out to you all too is just thinking about first-time sellers. There's a lot of home sellers actually in the last year, and this is actually kind of surprising to me. We focus a lot on home buyers, but we often don't talk about sellers in the same sorts of ways. And I think it's pretty interesting that when we think about first-time sellers, someone who's purchased a home and they may have done so decades ago, and then they paid their mortgage diligently for a long period of time. They could have refinanced, or they could have just paid ahead on their mortgage, or they could have just sat there and paid what they had locked in originally 20 years ago. What we are finding is that those people who are going out to sell in the last year, a number of them are actually first-time sellers. So we may think of those as young adults who are selling their first home and moving on to their next home. Certainly, that's absolutely possible, especially for young millennials and older millennials, very likely to be a first-time seller. But even as we scoot up the age range, we are seeing that 25% of Gen Xers were actually first-time sellers. So they purchased their first home and they may have done so in 2008, for all we know, and they've sat there and they've earned that housing equity. But we can even see that among younger boomers, there's actually 17% of them purchased their first home and they never left. And now they're a first-time seller. Why I'm bringing this up is because as we think about those folks as potential clients out there, they have a lot of unknowns. And I can think about my own family members, someone who called me recently, and my auntie, she had been in her condo for 20 years. And she literally said, okay, it's time for me to downsize. I have to make this move. I'm retiring at the end of the year. This is the time for me. And as she went about that, she had a lot of questions, including, but not limited to, where do I find my housing equity? She literally asked me, do I go back to the realtor who I originally purchased the home with? Does she have my housing equity? And I was like, what are you talking about? Your bank has it. What? She really did not know how to go about this process. She also asked questions about painting her house. And did she have to physically do that in her 70s? So you can see the kinds of questions that are out there among people who are scared perhaps to make that transaction happen. All right, so let's flip this back to qualifying income. When we think about the income needed to actually purchase a home today, we can see that's just going up, and that's because of home prices and also because of mortgage interest rates. So to localize this data further, looking at New Orleans, you would need a qualifying income of $73,000. In Baton Rouge of $67,000 to purchase the typical price home, and that's with 20% down. So again, is that matching local incomes? We know that it's not, based on what we can see that supply gap really meeting there as well. One of the things that's really important, though, is that we look at the total cost of homeownership. The previous slide does not. All it does is it looks at the cost of the home, the mortgage, interest rate, the cost of the property itself, and it looks comparing actual incomes within those local areas. What this actually does in this analysis is that you can actually add in property taxes and then home insurance. And we can see that there has been big changes here in the last year, but then also in the last 5 years from 2019 to 2024. So looking at home insurance in particular, we can see that that's increased 102% in New Orleans over that 5-year period. So thinking about the total cost of homeownership really being a struggle for many Americans to enter into the market. If we take it back positive, what we can see is there's a lot of all cash buyers. So again, thinking about that housing equity, we can really see the last two slides back to back being a reflection of the K-shaped economy, the K-shaped housing market that a lot of people are talking about, where at the upper end of the spectrum, we can see that folks are reacting quite well to the housing market. They have housing equity, they have financial assets, the stock market has done well. They can enter into the housing market and do A-okay, in comparison to first-time homebuyers who have really struggled and have struggled quite bad when we think about the qualifying income and then the total cost of homeownership to be able to purchase a home, in addition to saving for that down payment. So a lot of different experiences here. We do know that all cash buyers have really grown and have stayed quite steady. So we have a monthly figure of this, and we also have an annual figure. So I'm showing you the annual figure, which are primary residence buyers, and we can see that they're at 30% for repeat buyers. This is essentially doubled since pre-pandemic times, when we would see it closer to 15%. So really driven by that housing equity. And again, thinking about the growth in the stock market and financial assets playing a role here too. I localized some of this data. I pulled out the two highest counties, local areas within your state that have all cash buyers. I am guessing, I am not super familiar with these areas. These must be vacation places. I'm looking for nods from Tim, Luke, Summer. Are these vacation areas? I'm not even going to try and pronounce them. Lafayette isn't a country song, so no, they're not vacation areas. Okay, cool.
No, they're not vacation areas. They're just regular metro throughout the state.
Cool. All right. Awesome. Places where people have a lot of money to be able to actually buy homes with cash. Retirement areas too, we see a lot of all cash buyers. Also college towns. So lots of reasons why people can pay with cash, but that's what we see nationwide. But wow, more than 50% of all cash buyers in those areas. So that's impressive. Another opportunity I'm going to throw out at you is that there is still an ongoing myth that people think they need 20% down. This is something that is very, very persistent. It is worth repeating on your social media. It is worth repeating with clients that there may be overlooked opportunities when thinking about FHA loans, VA loans, USDA loans. People are not aware of these products, and they really are getting their advice from their parents, perhaps, or from outdated information, thinking that they need 20% down to come into homeownership. I want to give you some migration trends data here. We are seeing that Louisiana did gain population in 2025, small population gain, nearly flat, but there was a gain in population. Also, you do have a positive employment situation. So if you look 2020 to 2026, you can see a growth in job situation within your state. That brings movers in, certainly. And then in the last year, staying positive as well. So some of the states did have a negative job situation, which transpired over the course of last year. Yours did not. So having a positive job growth situation there, certainly a good thing. And actually at the higher end of the job growth than what we do see in some of the areas around the country. I want to give you some generational data here. I'm going to go pretty quickly. And again, you are going to get access to these slides. I did note that first-time homebuyers are down. We are seeing them at historic lows. And the other thing that's important about first-time homebuyers is the age is at historic highs. So while people are being shut out of the market, they're having to save for a longer period of time, perhaps bidding on homes, not having that contract accepted, celebrating a birthday while they're at it. And you can see just that difficulty of young adults entering the market. When we look at some generational trends here, what we are seeing is that we have Gen Alpha, born in the last couple of years, represented in the orangish peach color. As we shift over to the silent generation, you can see the bars get shorter over time. There's fewer in the silent generation. So we have the entire US population here. As we look at this chart, the millennial generation is the biggest generation in this country, but they are not the biggest generation of home buyers. Baby boomers are actually the biggest generation of home buyers today. So again, we're seeing that drop in first-time home buyers. So in comparison, we're seeing a rise in repeat buyers. There is a red bar in the baby boomer generation, and that's the median age of 62. That's the median age of today's repeat buyer. So this is the oldest repeat buyer that we have ever seen. If we look at this data historically, back in the 1980s, you would see a repeat buyer in this country who was 36 years old. So you see a lot of baby boomers. So when I brought up the focus of those potential first-time sellers, of people having this transaction that could happen at this time period, it is absolutely a potential client that's out there. As we shift over and we look at the millennial generation, this huge generation here, younger millennials are acting completely differently in the housing market than older millennials. So younger millennials more likely to be first-time home buyers, more likely to be encountering this market with some difficulty. Older millennials are actually more likely to be repeat buyers at this point in their life. So you can see that they're actually heading into their 40s, and you can see that they actually act quite a bit like Gen Xers in the housing market. So towards the highest incomes, actually of older millennials, buying bigger homes, more likely to have kiddos, all of the things that happen, frankly, when you're in your 40s. So you can see them acting in the housing market in that way. As we look at that second red bar, that's represented the median age of today's first-time home buyer, which is 40. And if we look at that historically, the typical first-time home buyer would have been 30. So you can see just how much older that is in comparison. What is important here, though, as you look at this chart, is there's a lot of talk about pent-up demand in the housing market, the need for more housing inventory. Where is that pent-up demand? Well, it's right here. It's at that peak of millennials who are represented by 32 to 34 years old. So that pent-up demand is right there. It's putting pressure into the housing market. They want to purchase their first home. That is their American dream. They're just absolutely struggling to get there. If we look at this generation breakdown, I want to pull out a couple of things among Gen Zers. So they're very young. They're only 4% of home buyers overall. But what's really important as we look at them is that they seem to have learned from millennials in that we are seeing that they have less student loan debt, a smaller amount of it, and a smaller share of them have it. And they are more likely to use government programs. So they're quite savvy as they come into the housing market. If they're able to get there, they used all their available resources to get there. So this is an interesting generation to watch as we watch the housing market go forward. For Gen Xers, the big takeaway from them is that they are the most likely generation now to be purchasing a multi-generational home. So thinking about an elderly parent perhaps with them, a young adult who can't afford to live independently with them, perhaps kids under the age of 18 in that same household too. So a lot of pressure is on Gen X shoulders as they think about homeownership. So 19% of them as home buyers actually did purchase a multi-generational home. So a lot of pressure there. As we think about Gen Xers, they are not at their peak earning where millennials are right now, but they are just there. So they are purchasing quite large homes too. And you can see that they are near their peak earning as well. So really very similar to those older millennials. Actually, I went over this one already. So let me move past that. That was just talking about those Gen Zers. Um, I do want to give you a couple on the agent role. This has been a question very consistently in the last couple of years. Is the agent role changing? Are we seeing any differing of opinion here? And frankly, the answer is no. We are seeing that buyers absolutely want agents. They're using agents at very high rates. And they do want that expertise. This is a very complicated transaction, and they want someone by their side to help them with that transaction. For sellers, we can see it's actually nearly an all-time high to actually use a seller's agent within this process too. And FSBOs have actually dropped to an all-time low. People don't necessarily want to place their home on the market as a FSBO. They want help with pricing. They need help with the paperwork, with marketing of their home and actually selling within that particular time frame. So people do want those agents to do all of those things on the flip side too. That is what we are seeing. Just to reiterate something I said earlier, this really is a K-shaped housing market. Those who are on the upper ends are doing quite well. Those who are struggling to get into the market are really struggling to get into the market. And we do see that the net worth of an owner versus a renter continues to grow. We can see and we estimate that the typical owner has $446,000 of net worth versus the typical renter of just $12,000. And because we expect home prices to continue to increase, this disparity will continue to grow as we watch the economy moving forward. I want to throw out one more opportunity there that I'm seeing in the market. We actually ask recent buyers, what would cause you to move in the future? Why would you move? Some of them say this is my forever home. That's common among baby boomers. Once they move into that new home in the last year, they don't plan on moving. But those who said that they were likely to move are Henrys. So if you don't know this term, it is high earners, not rich yet. And what I am saying is that when we look at the data, those people who said, I would move in the future are those who said, I'm going to move with a promotion. I'm going to move to a better area. I'm going to move to a larger home. I want a nicer house with nicer features. Who are those Henrys that you worked with a decade ago? Because those are the ones that I would flag as potential clients. You know who they are. They probably annoyed you a lot. They had to make a sacrifice and they didn't like it. So those are the people that I would reach out to. The last thing that I want to give you here too is that we know that there is a huge economic impact for every home that is sold. It actually adds into your local economy because it's a massive multiplier effect. We see that it actually adds nearly $89,000 into your local economies because it is not just the roof over someone's head, it's everything else that goes with that. So whether that is the furnishings or the appraiser or the inspector and so on, we know that there are many professions that are involved, and it is something to be quite proud of. The last thing I want to do here is I do want to run through just a few offerings that we have. We release things nearly on a daily basis here in this department. Our international report just came out today, showed that international transactions are down. Not necessarily a surprise when we think about the exchange rate. And we also think about housing affordability being real struggles. What we know is that there's a lot of data. And so if you can't get to it, we have this monthly research update that we release it towards the end of the month. All of the data points that were in red throughout the presentation, if I had your local area in there, we have it in the dashboard. So you can grab this. This is updated on a monthly basis with new, fresh stats. It is completely open to realtors to use. This is a resource for you for sure. Lastly, if you're not following us on social media, I would encourage you to follow us on social media. Again, we're putting out tons of content and we have a lot of infographics that you can easily share that content to. Become a research ambassador. We'll send you an email twice a month and we will write your social post for you. It literally is a copy and paste and post it onto your social. Very, very, very easy content. It gives you a lot of data of what is the latest and greatest that we have provided in the last month for realtors to use, including video content too. And then lastly, we want your feedback. If we should be doing research on something, if we should answer a question in one of those videos that I just cited, just send us an email and we'll do it. So yeah, please tell us what you need from us, what you want to hear from us, and we will get on that. So please do reach out if you have any feedback. And with that, I will turn it back to Tim, I believe. Thank you.
Thank you. Thank you, Dr. Lautz. Thank you. Thank you, Lautz. Thank you so much for that. We appreciate all the data and we appreciate you being with us today. So we're going to move on. Our next guest is Commissioner Tim Temple. Is he with us?
Tim, I don't believe he's with us just yet. So we may want to readjust with Summer while we wait on the
Yes,
commissioner.
no problem. Summer, are you ready?
Yep, ready when you are.
Okay, great. Well, then I'm going to go ahead and jump ahead a little bit. We're going to introduce Ms. Summer Mire. Summer serves as the Executive Director of the Louisiana Real Estate Commission and the Louisiana Real Estate Appraisers Board, where she provides oversight of regulatory operations for the state's real estate and appraisal industries. A graduate of LSU, Ms. Mire began her career as a real estate appraiser before joining the Louisiana Real Estate Commission as a compliance investigator, serving in that role from 2006 to 2010. She was promoted to deputy director in 2010 and in 2022 was appointed executive director. Ms. Mire holds both certified investigator and senior certified investigator designations through CLEAR, which is the Council of Licensure Enforcement and Regulations. Reflecting her expertise in regulatory compliance and enforcement, she is an active leader within the Association of Real Estate License Law. That's ARELLO for you all that are familiar with ARELLO, where she has served on the board of directors since 2022. She has contributed to numerous committees, including the Timeshare Committee, Membership Committee, Law and Regulation Committee, the Finance and Audit Committee. She has also served as chair of the Program Committee and chair of the Investigator Auditor Resource Committee. She is currently serving as president-elect of ARELLO, and Ms. Mire is slated to be installed as president for 2027. And your Louisiana Realtor friends are immensely honored and happy for you. Congratulations. We look forward to having you there. So thank you for joining us today.
Thank you, Tim. I appreciate that. And thank y'all for having me. Okay, I'm going to share my screen. Give me just 1 second to do that. Okay, can y'all see my screen? Everyone's
Yes.
good? Okay. All right, perfect. See if I can make it do a slideshow. Here we go. All right, so this is our annual renewal period. We are starting that effective on Saturday, August 1st. So I kind of just want to go through all of the information that everyone's going to need to get their licenses renewed for 2027. So again, that starts on August 1st, which is Saturday, and that's going to run through December 31st. As a reminder, all licensees, whether you're active or inactive, you have to renew your license during this annual renewal period. Those licensees that fail to renew the license by December 31st, you will forfeit your renewal rights and you're going to be required to reapply as an initial applicant and complete all the requirements of initial applicant so that you can participate in real estate activities again. So the biggest thing that everyone needs to remember about this that does include retaking the state and national exams and completing the fingerprinting background check process. So a lot of people don't realize that if you let that license lapse, that if you do that, you're going to have to take the exams again. 1 second here. Okay. So the license period renewal timeline, that timely renewal period. So the first renewal period runs from August 1st through September 30th. If you run during that time frame, you're not going to be required to pay any delinquent fees. Once you hit October 1st, then those fees pop up to $50 for active licensees and inactive licensees, and that runs through November 15th. The second delinquent renewal period runs from November 16th through December 31st. That inactive fee stays $50 for the delinquent fees, but it'll then jump up to $200 for the delinquent fee if you're an active licensee. So it's really, really important to try to get those renewals done between August 1st through September 30th. We're going to be sending out numerous emails and reminders throughout this period. My biggest important renewal reminder for our brokers is that your individual broker license and your broker company license are going to be two separate licenses, and each of those require renewal. So the links to renew those can be found in your LREC portal for each license, but keep in mind that you have to log into those separate portals to be able to complete the separate renewals. So if you log into your personal broker portal to renew your personal broker's license, you're not going to find that company renewal in that same MileRec portal. You have separate logins, so you need to ensure that you're going into separate ones to make sure that you're getting those renewed. That happens a lot to brokers each year, and then they're having to reapply with the corporate license to get that redone because they're not renewing it when they should be because it's in two separate portals. So please keep that in mind. There's two ways to renew your license. Obviously, we have our fastest option is going to be option one, which is to renew online. That's going to be our fastest and most efficient option. We do have the paper renewal option as well, but you would have to go online to print that from your MileRec portal. But if you prefer not to put your debit card information or your credit card information into a portal, obviously you can print out that paper renewal form and send that in. But the renewal portal is going to be at that portal.lrec.gov website. So a new option that we have this year is some of our licensees, they decide that, yeah, I've just not been very active this year. I think I'm going to move my license to the inactive status. And now you're able to do that via the online portal as well. Previously in the past, you would have to print out that renewal form, and there was a box that you would check to say that you wanted to renew in the inactive status. You don't have to do that anymore. You're able to do that all from the portal and all from the renewal portal and get that done. So it just makes things a little bit more efficient so that you're not having to send in this paper renewals if you're wanting to switch to the inactive status. So if you do have anyone, hopefully everyone wants to stay active. Obviously, we want that as well. But for those that are wanting to put their license on pause, if they're unable to practice real estate due to medical issues or anything that they may have going on in their lives, this does give the option so that they can continue to keep the license up without having to retest later. And it kind of puts their education on hold where they wouldn't have to keep up those education requirements until they decide that they want to return back to real estate activities. For any other questions that you have on our renewal season, you can go to our website at lrec.gov. You can also email us at info@lrec.gov, and we can answer those questions from there also. So what's new at the commission? So this season, we're going to be introducing text message alerts. Those we feel are going to be very important to get those information out to our licensees. We're not going to be sending out spam, messages ad nauseum or anything. It's just going to be basically text alerts that are going to include basically your annual license renewal reminders, our continuing education deadlines, any important commission announcements, and other time-sensitive updates that we feel our licensees need to know. We're still going to use we're still going to be using our email as our most most common communication tool. And, we'll still send our newsletters and things like that through their email. But any of our important, really, really important reminders, we're going to try to do that through text message alerts. You will have the option, if you're not comfortable with that, to opt out. We do hope that everyone would want to keep these text message alerts on. So to ensure that you're going to receive these timely communications, we are asking that you make sure that your contact information is up to date. It is an actual rule that you have to keep your information updated with Louisiana Real Estate Commission. That is under our Chapter 31 of LREC rules and regs. There's two ways to do that to update your contact information. You can do that via the MileRec portal, but we do also have a change of address form on the website that you can email or mail in if you prefer to do it that way as well. So a couple of things that happened this legislative session. We have two acts that we had passed this year that we worked obviously with Louisiana Realtors on. The first would be the wholesaling of residential real property. This is Act 807. And this is going to be a public protection bill that is dealing with wholesaling of residential real property. This requires a mandatory cancellation notice, which is now available on our commission website. The form is developed to implement the requirements of Act 807 of this last legislative session, and it provides a standardized process for canceling qualifying residential wholesale transactions in accordance with Louisiana law. I don't have a slide for the next one, but we do also have a vacant land disclosure that we worked with Representative Kim Carver on that came out of HB 1166, which is now Act 708. The commission will be working under the direction of Commissioner D. Halfin with the Standardized Forms Committee in August. We're going to start the review for that, but it will be it's going to require property disclosures for the vacant residential real property. So that will be something that we'll be looking at. Those forms will go effective on January 1. But those will be something that the commission will be working with Louisiana Realtors in conjunction with to get those forms done as well. We are working on doing some online applications with the commission. We're excited about this so that we don't have to have so much paper coming into the office. We are going to have applicants to be able to submit their initial salespersons and their broker license applications online. The online application system will allow applicants to submit the required documentation and pay applicable fees electronically. And those forms that are going to be coming to the online system include the initial real estate broker license application, the salesperson license application part A, our felony applicant forms if you have a felony background, our errors and omissions insurance coverage, and also the supervision declaration, which is the part B page. As a reminder, this year for our mandatory courses, there are 2 mandatory courses that are required to be taken in 2026. The first is obviously the 2026 mandatory, which is required of all licensees. That is going to be transparency, technology, and trust. This has to be taken obviously by both salespersons and brokers renewing in the active status. But as a reminder, brokers, you do have a broker mandatory course that is required this year as well. So we have a broker leadership and compliance course that has to be taken also. We do also have a mandatory commercial alternative course that's being offered by Louisiana Realtors. It is a Money Matters and RPR for Commercial Agents course. If you are a commercial agent, this course can be taken as a substitution for the 2026 mandatory. But please keep in mind that that broker mandatory course still has to be taken if you are also a broker. And that is what I have. I'd be happy to answer any questions. Let me see if I can get off of this screen. Okay.
Hey, Summer,
Thank
we have the
you. Yes.
commissioner that's joined us. So unfortunately, we're not going to have time for questions, but
No
we'd be
problem.
happy to field questions through our email and get them to you and make sure that everyone gets a response back. But thank you so much. And I will say this, that you and your team at the commission were wonderful working this session with us. So we really appreciate it.
Thank you, Luke. I appreciate it. You too.
Absolutely.
Good deal. All right, y'all ready to roll on? Thank you again, Summer. It was a pleasure having you. We have 2 of your people with us tomorrow at our general membership meeting. We look forward to having them. So thank you for sending them over to Southwest.
Absolutely. Thank you.
We're going to move right on. Commissioner Tim Temple is here. You know, a salesman once told me I never met a Tim I didn't like. So, hi, Tim. Good afternoon. Thanks for joining us. We appreciate it.
Glad to join. Can y'all see me? Because I'm doing this on my phone.
Yep, I got you.
Yeah, perfect.
Yeah.
All right.
Thank you again. I'm going to do a quick introduction and let you get rolling.
Go for it.
Tim Temple was elected Commissioner of Insurance in 2023. As the state's top insurance official, Tim committed to ensuring the Louisiana Department of Insurance protects and advocates for consumers while operating at the speed of industry. Since taking office, Tim has worked with state lawmakers and the governor to develop and pass significant insurance and legal reform aimed at promoting competitive, affordable property and auto insurance markets. He has championed resilience efforts like the Louisiana Fortify Homes Program and wind mitigation surveys for the benefit of all residents and businesses in the great state of Louisiana. As Louisiana's chief insurance regulator, Tim embraces innovation and has modernized the department to adapt to the rapidly changing insurance landscape it oversees. Tim holds leadership and advisory roles with the National Association of Insurance Commissioners, serving as vice chair of the International Insurance Relation Committee and as a member of the Property and Casualty Committee and the NAIC's Policy and Research Steering Committee. His broader NAIC involvement includes membership on multiple task force and committees addressing actual standards, market oversight, solvency, reinsurance, producer licensing, anti-fraud efforts, and consumer issues. Tim is a native of DeRidder, Louisiana. He and his wife Amy live in Baton Rouge and with their 2 daughters. So thank you for joining us today, Commissioner Tim. I did not know you were from Southwest. How about that? So thanks.
That's it.
Yeah, man. All right. Thanks. Turn it over to you.
Yeah, glad to be here. I think we need to shorten that bio. That's a lot of information there. No, look, I appreciate the opportunity to talk with the Louisiana Realtors. Look, y'all are the backbone and certainly heavily engaged in helping drive Louisiana's economy. Helping people that want to move to Louisiana find affordable housing, helping people that want to move around Louisiana find affordable housing. And I certainly understand that insurance plays a vital role and you being successful and people living and working in Louisiana being successful. And I'll focus on property. We can certainly get into some of the auto if you want to, but I think as everybody on this call knows, back in 2020 we had Hurricane Laura, and then over the next 12 months, Delta, Zeta, and Ida. Totally upended our property market. You had 12 companies go insolvent. You had about $23 billion in losses paid by the industry. Dozens of other companies effectively stopped writing or left the state. And there was obviously a huge demand, but a restriction in supply that drove up cost. The companies going out of business drove up cost. Reinsurance cost went up, and it was a accumulation of a lot of unfortunate circumstances that put Louisiana in the position where homeowners insurance, property insurance, commercial property insurance was very, very unaffordable, more so then than it is now. We've started to come out of that trough. We passed legislation in 2024 that we had identified allowed people to, quite frankly, abuse the system. People have claims. They need to be addressed. Insurance companies need to do the right thing, handle the claims, come up with evaluation, and then start paying checks. But it also allowed a lot of people and a lot of businesses to circumvent that process and inject claims or assertions of, bad faith, which drove the price of these claims up. The insurance company responds. They either defend it through legal action or they pay more than they should have. But all of that combines to make it more expensive. We passed legislation in 2024 that started to address a lot of these issues. Fortunately, we now are in a position where we have more companies coming back to Louisiana. Just this year in 2026, we've already licensed 7 new companies writing residential homeowners insurance. Through January of 2024 through to today, it's over 20 companies now. Those companies are starting to write business. Not all of them are actively writing, and I don't want you to think that I'm sitting here telling you they're all going to come in and write 1 million policies. That's simply not how it works, and quite frankly, that would scare the hell out of me if a company wanted to come in and just take a big portfolio, with, starting off. So they're easing into the marketplace. That's good news for us because consumers are having options now. There's more companies out there. Tell your customers, shop your insurance, call your insurance agent, have them obtain quotes from other companies. We're also in an environment where companies are taking rate decrease now. This year in 2026, we've had 4 companies have taken a rate increase. 3 companies, it was a zero impact, and then 9 companies have taken a rate decrease. And a lot of times I'll get a question, well, I just paid my bill this month and my premium, and it didn't go down. And I think we all know, and we need to explain to consumers that's not how it works. It's not like the price at the pump when you go get gas where it changes, it fluctuates daily. When you bind your insurance, if you're going to pay it over a 12-month period, that's the rate you pay for the next 12 months. If you change your insurance carriers midstream or at renewal, that's when you'll see, the impact for the rate changes that we've had. So I remind people all the time to, call your insurance agent, get other quotes. We show on the department's website the companies that have taken increase, decrease, or neutral. That's public information. It's out there. If you're with a company that did not take a rate decrease, my question is why? Why are you still with that company? And look, there's legitimate reasons for it. Some people just like that company. They like the way they've handled claims in the past. Maybe they like the way they answer their phone. I don't know. But you have choice. And my point is, don't be loyal to an insurance company. And when I hear people say, well, I've been with the same company for 30 years or 40 years, my question always is why? You need to shop your insurance. You need to, you work hard for your money. One of the things I like to say, you've worked very hard for your money. Make sure that the insurance company is working just as hard to get your insurance premium dollars. And that means go through a process. Sometimes people don't want to do it, but I do town halls around the state, and I am constantly hearing people tell me stories of they shopped their insurance or they moved to another company, or in a lot of cases, they got a renewal and they're saving hundreds, if not thousands of dollars. So there are savings to be had there. The fortified roof program is another um, legislative item that has put Louisiana on the map, not just nationally, but globally. We're the fastest growing state in the country for fortified roofs. We now have over 14,000 fortified roofs, and that program is not even 4 years old, or I guess it's 3 years old. Um, we are the fastest growing state in the country for fortified roof. Fortified roofs get you a reduction in your homeowner's premium. Fortified roofs ensure that, it gives you that peace of mind that when the wind blows, your shingles are going to stay on your roof, your contents are going to stay dry, and you're not going to have as big a claim. And in some instances, you may not have a claim at all after a catastrophic of a hurricane event. So fortified roof is very popular. Like I said, over 14,000 roofs in Louisiana now. We're going to continue to grow that. We have $80 million this year to do fortified roofs. We've partnered with some local parish governments that are bridging the gap between the $10,000 that you can receive through the grant program, and if it's more expensive than $10,000 to put a fortified roof on, local governments are starting to partner with us to fund that gap. Jefferson Parish has done it. Orleans Parish recently just allocated some money. We had a conversation with Lafayette Parish and city government to try and do something, and other parishes we're looking at too. So it's a popular program. I would encourage, if you know council members, parish government members, to ask them to work with the Department of Insurance and set up a program in their parish. It's very popular. In addition to that, we're going to continue to push for reform. I'm constantly out marketing the state of Louisiana to the property market, letting them know that we have changed things. One of the things you introduced was, I wanted to make the department operate at the speed of government. We are a state agency, but that doesn't matter. We need to respond at the speed of business. With all the, positive influx that the state of Louisiana has, or news that we're getting with all these new whether it's a steel mill or meta centers, data centers, whatever it is, we do have more eyes on Louisiana, people looking to come to our state. I want them coming here. I want them buying houses in Louisiana. And I know that insurance is key on that. So we're going to continue to push for more reform. I'm continuing to market to the insurance industry to let them know that Louisiana is a better place to do business than it was, just a few short years ago. I want them doing business, and we're having some success with that. So we'll keep pushing. I certainly appreciate the relationship with the Realtors Association. Y'all see a lot, y'all hear a lot of the problems that people have in closing homes with insurance cost. I'm certainly very cognizant of that. And again, my focus is on making insurance more affordable. The less people pay for insurance, the more dollars they have to spend on other things. And that's my goal, is for people to pay less in insurance. And that's my update for right now. I'm happy. I don't know if you want me to take some questions. I don't know what the process is, but I'm happy to go into some other areas of insurance that we might not have talked about.
Other
Yes.
than
Go
fortified
ahead,
roof,
Ted.
sure. Other than fortified roof, is there anything else as an organization, as Louisiana Realtors, that we can help and help your office with? Is there anything that we could tell our customers or our clients or our legislatures? What do you see as is there any magic sauce here to help lower rates, to help push that down the road?
Yeah. Well, look, one thing, let me jump into flood real quick, if you will. We saw in Avoyelles Parish, with the tropical storm Arthur that dumped 30 inches of rain in less than 24 hours, just an unprecedented amount of water. But there were only of 14,000 active or in-force homeowner policies in Avoyelles Parish, less than 800 had a flood policy on them. And that number, as best we can tell, was down about half from, they had somewhere around 17, maybe 18,000 enforced policies 5, maybe 10 years ago. So, And I tell people, just because, we hear it all the time, you don't live in a flood zone, so you don't need flood insurance, right? Or you live in an X, so you don't need flood insurance. No, it doesn't mean you don't need flood insurance. It means it's not legally required by your lender, right? We need to start messaging buy flood insurance. No matter where you live, you can flood. It might take a substantial, event, but just like we saw with, Tropical Storm Arthur, 30 inches in less than 24 hours. That is unprecedented. And flood insurance was probably very reasonable in that parish. As far as rates go. So we need to, collectively, the Department of Insurance, myself as commissioner, I would ask realtors to always encourage and promote people to buy flood insurance. Don't just do the, you live in an X, so don't worry about it. We need to talk more about that. On the non-flood issues, yeah, we certainly want to continue to promote the fortified roof program. In addition to the grant, which I mentioned, you can, if you choose to put a fortified roof on yourself, if you're replacing an existing roof, or if you're, remodeling your home, but you're in a situation where you need to put a new roof on your home. If you choose to pay for it and do it yourself, you can receive up to $10,000 tax credit or a $10,000 tax deduction. Obviously, everybody likes a credit better than the deduction. That program is capped at about $1 million a year, but that's still quite a few roofs that could put on if people chose to do that and seek the tax credit. So, talk that up, promote that. We've worked with the Building Code Council to see if we could start to move towards requiring fortified roof as the standard in some of our coastal parishes. I mean, we have 2 million people that live within 50 miles of the Gulf. That means there's a lot of properties within 50 miles of the Gulf that all are going to be exposed to wind when hurricanes come. So we need to start building more resilient structures. I would ask you as realtors in the association to be part of supporting that effort. Tell legislators that that's needed. Any elected officials, whether at the local, state, government level, just let them, we need to build more resilient homes because we have such a large portion of our working population that lives close, proximity to the Gulf. So we can't move our industry. We can't physically move our state. We're going to be forced with hurricanes, in forever. So we might as well start building more resilient properties.
Very good. Luke, do we have any questions from the group?
Yes, sir. First, let's start with from Sherry. Commissioner, do you have any suggestions or of what questions that these realtors clients should be asking when it comes to homeowners insurance when in the process leading up to the closure of the deal?
Yeah, look, start working with the agent early to get a quote. Make sure that don't look. And I get it. Years ago, especially prior to 2020, when insurance was much more affordable than it is today, getting the insurance quote was kind of the last piece of the puzzle there. And I think we need to start putting that towards the front. As soon as that you're working on a home for purchase, we need to make sure that buyer is letting their agent or broker know that they are looking at a new property. Give them the address, get it quoted, and make sure that we know that up front. And then there may be things that you can do to help mitigate against that. Again, if it's a home with an older roof, maybe that needs to be part of the conversation and the finances of the deal to put a new roof on, get a fortified roof, and make that property more attractive and get a reduction in the premium.
Excellent. Thank you. And that's a great segue into our last question from Steve. What discounts are you seeing that are being applied to homes with fortified roofs?
Yeah, look, they're all over the board. And those are all, by the way, on our department website. You can see every admitted company has to file discounts with us. They range from the low single digits up to 40. I think the highest I've seen is 48% reduction. And that's obviously off the wind portion of your homeowner's premium, but that's also the largest portion of your homeowner's premium is the wind in the formulary. So earlier this year, we did promulgate a rule that companies have to go towards benchmarks. That starts January of 2027. So we're bumping up the lower end. I don't think you're going to see any in the single digits starting in January. You might see some of those higher end come down as well, but we're creating some benchmarks that companies have to start with. And then obviously they can pivot and go higher or lower if they want to, but they have to do some work with the Department of Insurance to justify and make sure that they're financially sound. But those benchmarks start January 1st. But again, the current ones are out there at the department website. You can look at them. But I always tell people too, Luke, call your insurance agent or your insurance company if you're with a direct writer. Ask them what their discount is. Ask them to apply it if you have a fortified roof. And if you don't like that number, or if you think it's not right, or it sounds too low, or even if it sounds too high, call us at the Department of Insurance and we can help walk you through it. We can make sure that the information that you're being told is accurate.
Tim,
Wonderful. Thank you.
I have one last question for you, Tim.
Sure.
Fortified roof. Let's stay there for a hot minute. Is it a roofer that makes the roof fortified? Is it a contractor? Are there approved contractors in the state? How does that mechanism happen for an individual homeowner?
Yeah, that's a good question. The fortified roof that we talk about, that's part of the state, the Department of Insurance, our grant program, is a certified roof. It's through IBHS, and I'm drawing a blank right now. Insurance Business Safety or Home Safety. Um, it's a think tank that's based out of South Carolina, and they developed this roof many years ago. Alabama was the first to adopt it. By the way, Alabama has about 70,000 fortified roofs after over a decade. Very affordable insurance in South Alabama, quite frankly, around all throughout Alabama, mainly in part because of this fortified roof program. It's a roof that's put on by a certified roofer. They have to be certified. They have to go through a process to be certified to put on a fortified roof. Look, it is a much more, it's not more labor intensive from the standpoint of actually putting the roof on, but from a documentation standpoint. There's a lot of photos that have to be taken by the roofer, and they have to be trained in how to take these photos and to confirm that the roof was put on correctly. You have to take pictures of the material when it comes to the job site. I mean, you have to take pictures consistently throughout the application of putting the roof on. And so that way, once all these photos are downloaded, then IBHS looks at it, confirms it was done correctly, and then they issue that certificate, which you, the homeowner, need to get the discount from your homeowner's insurance company. So it is a little bit more labor intensive, but again, you're getting that peace of mind. You're getting a fortified roof. You're getting a roof that was designed to keep the shingles on and the water out of your home, lower your insurance loss, lower your insurance premiums in the future.
And it does not apply to an existing roof. It has to be done when it's being put on.
It has to, well, look, there is a retro fit using some foam, some type of foam spray and insulation on the inside. I don't know that any have been issued using that process. It's not one that I'm familiar with as far as I know that's been used. But the fortified roof, yes, they actually, if you're replacing a roof or if you get a grant, they strip off the existing shingles. They remove the shingles. They check and make sure that the decking doesn't have any deficiencies, that it hasn't, rotted, or that there are holes. And I've gone out and I've watched some of these roofs actually being put on by roofers, and it's amazing when they pull those shingles back, the condition of some of the decking on homes. I mean, it's a wonder that it doesn't leak every time it rains, and maybe in some of those homes it does. But you're getting new decking to be replaced where it needs to be. You're getting all new shingles, which are designed to withstand, I think, 150-mile-an-hour winds. It uses a waterproof barrier between the decking and the shingles, and then they use a ring shank nail, which is simply a nail designed to not lift out when wind gets underneath it. So it is a much better roof. It's been proven. It's been tested in Alabama. I think Hurricane Sally, I think they've had somewhere around 17,000 fortified roofs were exposed to that hurricane. And I want to say it was less than 3%, maybe 5% of those 17,000 homes reported any roof damage at all. So it does work. It is the future for an affordable South Louisiana homeowners market. We need more fortified roofs. We need more resilient structures.
Perhaps there could be a list of roofers that are certified to do this on your website, or some other home
That
builders association could provide that.
And that is, we have those, that information is on our website. And yes, we're working with all the other various associations out there to try and promote and encourage people to learn as much as they can. I think the more people learn, when you learn about a fortified roof and the benefits of it, I think people are it's the smart decision to make.
Absolutely. Thank you.
That'd be another great segue, Commissioner, to touch on the roof registry that went into effect, I believe, July 1st, and how the collection of that data could also play into lowering rates as the more information we get about the more homes that are covered.
Yeah, and what we did there is, we're trying to create a database, and I know I always offend people when I say this, but it's the facts that, and because I've heard it from the insurance industry, the people that assume the risk and pay claims is that they don't have confidence in Louisiana's housing stock. And what we're trying to do is rebuild confidence in our housing stock. And part of that is creating a database that the insurance industry can go to see where these roofs are. That you voluntary, it's voluntary, but you can put your home in this database, and then insurance companies can go and look and say, hey, Luke's on 123 Main Street, and he's got a fortified roof. It's 2 years old. We know that. I mean, that will create competition. People, insurance companies want to write fortified roofs. And so we're trying to help rebuild confidence in our housing stock in Louisiana, and that is one way to do that is to let the industry know that there's this database of roofs out there. It's voluntary. You don't have to participate in it. If you want to withdraw from it, you certainly can as well. And so I'm not trying to make government bigger, more intrusive, but I want people to be able to have that competition. I want companies coming and saying, I want to write that home because it has a fortified roof. The only way they know about it right now is if you go to your insurance company and say, hey, I have a fortified roof, give me a quote. Or, I just put a fortified roof on. You need to, give me the appropriate discount. But, I want to try and create more awareness of the number of fortified roofs in Louisiana, and obviously that number goes up and up every week.
Great. So last question, I believe, is from Kendra. Can you touch on, Commissioner, the necessity for lender requirements regarding coverage
For which coverage?
for homeowners?
I'm sorry, ask the question again.
Could you touch on the necessity for lender requirements regarding coverage?
Lender requirements. The lender requirements are going to be whatever the lender wants on that. We don't get involved from the regulatory standpoint. That's not an area that we get engaged with. And I'm not trying to dodge the question, and maybe
Sure.
maybe I'm not understanding it clearly. But I can say if there's an issue that you're seeing that lenders are putting on requirements, let me know. We want to have a conversation. One that might be part of one issue we have is a lot of times that the insurance company will require put a higher valuation than the lender does, or even, obviously the sales price. And, one thing I've been trying to help the public become more aware of is when an insurance company is looking at your house, the risk and the rebuild cost. And that comes into conversations a lot. People will say, I just built my home and it cost, $200 a foot to build, but the insurance company's telling me that their valuation, they're looking at it $300 a foot to rebuild it. The insurance company is looking at it from a scenario of there's been a catastrophic event. There are tens of thousands, if not hundreds of thousands of homes that are in similar situation. There's obviously, prices go up for labor, prices go up for materials. There's competition on builders. There's a lack of, supply out there. So they have to be able to pay to put your house back together in the worst market conditions that there are, not the best market conditions. And so that is one issue that we have a lot of conversations about. We're working with those vendors that come up with those calculations to make sure that they're using, as accurate a number as they possibly can. So, and again, I think it was Kendra, you said, if I didn't answer that question, if I didn't get to your question the way you were, what you're asking, reach back out and let me know, and I'll try and answer it properly.
Yes, sir. Well, thank you so much for your time. We appreciate it. We know you're a busy man, and you're continuing to do the people's work, so we appreciate you.
Now, look, I appreciate the opportunity to speak to you and all your association members. Again, y'all are a vital part to the Louisiana economy. We've got to make sure that you've got a market that you can sell your product and help people, get into homes. I understand insurance is a key factor in that, and I want to work with y'all to make sure that we can make insurance as affordable as possible for everybody. So thank you.
Thank you. Thank you, Tim. Thank you
All
for
right.
joining us today. We really appreciate it.
Happy to. Y'all be safe.
Thanks. Thank to you.
Thank you.
Luke, would you like to give us a legislative update right now, or does Norman want to jump in?
I'll let Norman jump in if he'd like to, and if not, I'm happy to begin whenever y'all are ready.
You take it and run with it, Luke.
Yes, sir.
All right. Well, next we're going to hear from Luke. For those of you that don't know Luke Bullock, Luke is currently serving as the Director of Governmental Relations at Louisiana Realtors, focusing on advocating and legislative and political strategies of the association to support the real estate sector and to protect property rights. Skilled in innovative and analytical skills and legislative policy, the role emphasizes fostering relationships with lawmakers, regulators, and key stakeholders to align policies with organizational and member priorities. With extensive experience in political and government affairs, I bring a collaborative approach to navigating complex policy environments. Past roles include political director at Louisiana Associated Business of I did not know you did that. Industry Association Director at Innovative Policies, where strategic advocacy and stakeholder engagement were central to the work. I got that right off your LinkedIn, Luke. Welcome. Thanks for
Yes,
being
sir.
here.
Thank you. Kind words. I appreciate it. It sounds familiar, almost like I wrote it.
Yeah.
Well, no, thanks for having me. I don't have a slide deck for you guys today, but I'm happy to share any information that you may hear in my update. And again, my number is 512-517-3690. If you ever have a question or a concern, please feel free to pick up the phone and call me or shoot me a text. I am going to be always available. So let's just head on right into it. All right, so the 2026 legislative session, we touched nearly every pressure point in the housing ecosystem: insurance, mitigation, disclosures, wholesaling, appraisals, security deposits, lease termination, consumer protection, and local housing policies. Our first major win was residential wholesaling, HB 468, that Summer spoke on earlier. Now, excuse me, Act 807 is one of our most significant transaction-related victories. Was Representative Troy Hebert's legislation he carried for us. He's also a realtor, for those of you who don't know. The law establishes a clear framework for the wholesaling residential real property, including definitions, written agreements, disclosures, notices, and rules governing deposits. The broker takeaway for HB 468, I'd say, is that to update your transaction training and compliance materials before the law's operative requirements affect your agents. The law goes into effect, as you heard from Summer, on August the 1st. And it'll treat wholesaling as a defined compliance category, not an informal side transaction. Our second major victory for this session was number 2, the vacant residential property disclosures, HB 1166, now Act 708. It was carried by Representative Kim Carver of, I believe, our NOMAR local association. That's his area. And it creates Louisiana's first formal disclosure framework for vacant residential property. It covers residential land with no improvements and certain property with uninhabitable or limited improvements. It becomes a law or into effect on January the 1st of 2027. And we are going to continue to work with the LREC on the form components to this, and are going to make sure that our membership and our brokers, such as yourselves, are fully educated on that, that's coming down the pipe. The broker takeaway for this specific piece of legislation would be to begin identifying the listings and workflows this will touch. Your agents obviously will need a clear explanation of when the new vacant property disclosure applies, and what must be delivered and what it does not guarantee. So we found when adding this bill to our agenda for last session, we found that 15% of closings that end in litigation are because of vacant residential property disclosure issues. So hopefully this will mitigate that issue that our members are facing. Number 3, appraiser liability, HB 1027. This is also by Representative Troy Hebert. It provides protection from certain liability for real estate appraisers acting within the scope of their professional duties. So essentially, we wanted to match the litigation and liability protection that realtors have for specifically smoke alarms and smoke detectors in homes and carbon monoxide detectors, putting that back on the seller and not having one of our professional members or our affiliate members have to deal with that, as it's not their scope of practice. So lastly, on our agenda, we had security deposits and lease termination. Also a realtor, Representative Alicia Boyd, a great member, carried HB 292 for us that addresses the return of security deposits. And what this does is it allows the landlord, property owner, or property manager to contract with the tenant for 15 additional days if there is damage to return that security deposit. So as you are all aware, insurance remains the main issue sitting at the closing table every session, it seems like, with every buyer and seller in Louisiana, also focused on insurance and what their premiums will look like. HB 1187 created a funding mechanism connected to Louisiana citizens, and it helped support approximately $80 million for the Louisiana Fortified Home Program this year that Commissioner Temple just spoke on. So mitigation is one of our few durable strategies that can reduce physical risk and help stabilize insurance costs over time. And like everyone is, I'll just reiterate that the fortified roofs protect homes, they preserve inventory after storms, and give insurers better risk to write. So what did not get finished this session, and not because of lack of support or lack of advocacy on our part, it was lack of it was a procedural issues and scheduling issues within the House and the Senate. But property insurance affordability and availability remain the industry's central state level challenge. The commissioner touched on that. Housing supply from an NAR's perspective and an LR's perspective, the housing supply must remain the focus on affordability, not price controls that discourage construction and investment. We must keep reducing unnecessary barriers for builders, appraisers, property managers, and real estate professionals. And that is a great segue into the federal landscape and what it looks like. As most of you are aware, 21st Century Road to Housing Act is now law. That's the largest sweeping federal reform for housing in a generation at least. It became law on July 11th, supported by all but one members of our delegation here in Louisiana in Congress. And it gives communities tools to reduce barriers to housing production and streamline federal processes that delay construction. So touching on what I just mentioned regarding unnecessary barriers for builders. It modernizes the program supporting manufactured, modular, rural, and entry-level housing. That's great for Louisiana specifically because of our rural population. It expands access to homeownership and capital, including improvements involving appraisal trainees, reconsideration of value procedures, and small dollar mortgages. It supports preservation of existing housing stock and encourages local planning tied to increased housing production, and it restricts new purchases to single-family homes by large institutional investors, matching that policy initiative started by the president in his executive order earlier this year. Generally, corporations owning 350 or more such homes, while preserving targeted exceptions, including to certain build-to-rent activity. But that was I had a blip there. Basically, what that means is that investors that have less than 300 homes won't be affected. If you do have more than 350 homes, you're going to have a build-to-rent activity in your process. The last point is that the law is aimed at mega investors, not the Louisiana family and local investors that I just mentioned. The objective is to guide the individual buyers a fairer shot without choking off legitimate local investment or rental supply. The broker takeaway for this one would be that do not promise immediate relief. The NAR has said that. We have reiterated that this is going to take some time to implement. This law is a supply law, and the supplies take time. The real near-term work will be the agency implementation and how HUD takes the law and how they implement it, local participation, financing rules, and making sure Louisiana communities use the tools that Congress has given us with this act, and an education on our part through our members and through you guys to our members about what the bill can do for our clients. Additionally, FHA is reducing transaction friction. HUD has announced 14 policy changes to FHA's single-family mortgage insurance program. For Louisiana, where FHA financing is an important doorway to homeownership, fewer unnecessary steps can mean fewer avoidable delays and lower friction for qualified buyers. HUD is also considering a voluntary repayment agreement partial claim or RAP demonstration. The proposal would claim certain loss mitigation debts to be secured through an agreement under the first mortgage rather than a separate subordinate mortgage. The practical goal is to reduce title complications that can surface years later or at a sale or refinance. And we wouldn't live in Louisiana if I didn't mention disaster recovery. Disaster recovery and flood insurance remains a key top issue on the federal level. NAR-supported FEMA Act passed the House Transportation and Infrastructure Committee and awaits action by the full House, which obviously, because of the August recess coming up, won't take place until after the end of the month. The proposal would place greater emphasis on a permanent home repair, allow resilience improvements during rebuilding, and reduce dependence on prolonged temporary housing. And the important National Flood Insurance Program is currently authorized through September the 30th. However, as Congress goes into, or as the House goes into their break home, I would just really stress that like you need to bind your flood insurance for your cells prior to that, because after the September the 30th, we know what it looks like when the federal government is dealing with the government shutdown. And luckily, the House has passed the bill that would a CR that would temporarily fund the government. It has not passed the Senate, and so there's still some work to do there. So it's really a toss up as to after September the 30th what the flood program will look like. So what you guys should do next. One is you should just like let us know what you're hearing in the field as we move towards our next session. We're going to be working with our legislative committee and our executive members and our board members. But you're our first line of defense out in the field. So anything that you guys are hearing, any concerns that you have, local, state, or federal, please give us a call, and we're going to do our best to take care of it. Thanks.
Right.
Luke, I want to jump in real quick and say Luke's done a great job. He stepped right in and he's built a great team underneath him at Louisiana Realtors, and he's doing a fabulous job at the legislature. So I wanted to say that first. And every member will get before Friday, we're hopeful, a memo on the new wholesaling disclosure so that you can make your agents aware. You'll get a memo on what it is. You'll get a copy of the actual disclosure form that will be required to be given to sellers by the wholesalers, and you'll get a copy of the law itself. So make sure your agents understand what's entailed in that. Couple big changes coming up on the appraisal front. FHA, VA, Fannie and Freddie, they're starting November 2nd. There's major changes and a whole ton of information more that appraisers are going to have to put together to provide that information to the lender in order to get that loan approved. They're going to have to work with agents to get that information. So you'll get an email, all members, September 1st. We're going to do a webinar with an appraiser in Louisiana that truly understands this and is going to lay out all of the information your agents will need to know to be able to navigate the new changes under the appraisal guidelines moving forward. And then lastly, Luke mentioned the new law January 1st with the residential vacant land disclosure, which is mirrored very similarly after the residential disclosure that your agents are presenting their sellers now for completion on residential 1 to 4. And we're hopeful we can start meeting in August, as Summer said, and have a form out by October so that you can be educated. And on that, as it takes effect January the 1st. And then lastly, mark your calendars. You've probably seen this, August the 13th. We're having a refresher course on the buyer representation as it relates to the state law we passed to mirror the settlement guidelines and the settlement guidelines, because we are hearing there are firms that are not using buyer brokerage agreements out in the field, which you can get in trouble not only from the commission, because the LREC has state law overview that every licensee must have a buyer rep agreement. But with the settlement, remember that you have to not only have one, but you have to have that completed by the time that agent before they show the property. So we're going to give all the agents and you the tips, tools you need to be able to answer those questions, how to get one signed prior to showing. And I encourage all your agents to sign up for that. It's been emailed. It will continue to be emailed to you and through social media. So with that, Luke, I'll turn it back over to you all.
All right. Thank you, Norman.
Thank you, Norman.
Go ahead, Tim.
No, I was just going to wrap up. Do you have anything to add before we adjourn?
No, there's going to be some changes that we're going to be working with our members in our legislative committee on next legislative session. So again, I can't stress enough how your input into LR and to me can guide what we do in the future. So I'd appreciate any input that you have.
Good deal. Thank you so much, Luke. We certainly do appreciate all of your efforts at the Capitol, and we always look forward to your reports. Good job and keep it up.
Yes, sir.
I want to conclude by thanking Norman for hosting us and Luke for putting this together. LR done a great job. All of our brokers across the state tremendously love this. We want to also thank Dr. Jessica Lautz, Tim Temple, our insurance commissioner, and of course, Summer Mire with the Real Estate Commission. We all very much enjoyed their presentation today, and we hope you got as much out of it as we did. With that, I would like to conclude today's broker meeting. Thank you all for joining us, and we look forward to seeing you on our next brokers meeting as well. All right. Thanks, guys. Have a good afternoon.
You too.